Hey there, this is David Pereira from Rent to Grow Homes. Here to bring you our latest rent to own deal. This one back in our regular patch of Cornwall, Ontario, where we do probably 80% of our deals. So Santa is someone who reached out to me about 3 weeks ago. So I've talked to her a couple of times, and my mortgage broker's talked to her a few times as well. Gone through all of her paperwork, and he and I agreed she's the kind of person you want to help. So her situation is she moved to Canada 10 years ago as a student, so came on a sort of a student visa. 10 years later, she already owns a duplex, so she's living in one half, renting out the other half. She is working three jobs. So she has a proper full time job with the bank, but then she's also working two side hustles, one of them at a local hotel as I think, front desk customer service person. And then she does some bookkeeping on the side. So very talented, very hardworking, clearly. Has already started the house hacking by buying a property, living in one half, and having someone else basically pay down your mortgage. So lots to like about her. The reason she needs rent to own is she wants to buy another house because her mother and sister will be moving in with her. And the current unit she's staying in at her duplex, it's too small. So she's looking for a bigger place, ideally something where her mom doesn't have great mobility, so something safe, something that's very easy for the mom to navigate. So went through all her paperwork, validated everything, and we came. My broker approved her for a budget of 400,000, but she's really targeting 375,000 as kind of the price point. So I put together the numbers here with the assumption she's going to buy at 375. So as per usual, I'm going to walk you through all the numbers here. On the right, you can see kind of the summary. And so the key point here is this is going to be a 3-year deal. 375 today, the future price, so the price that she's going to buy it back from the investor at is 431. Upfront investment from the investor is 70,000. There is monthly cash flow going to the investor, so this is on top of all expenses being paid. 350 clear goes each month to the investor, which is a 6% cash on cash return. The annualized ROI is 22.5% per year. So if I multiply that by 3 years, that's 67.5. The ROI dollars, so this is the profit after 3 years, is 47,638. And if I think about sort of the profit pie, how much is available, the investor is getting basically 2/3 and I get 1/3. So that's the summary. Now let's go into the details. So as I mentioned, 375 is where we're starting at. We're doing annual appreciation of 4.75 here. So it's a 3-year deal. She's going to buy it back from the investor at 431. My assumptions here is the investor is going to get a 3-year mortgage, fixed mortgage of 4.5. Now, truthfully, we've seen less than that. We've seen 4s, 4.1s, even 3.95s. So if this rate is lowered, it actually changes the math a little bit and clearly creates more opportunity for profit, which is a great thing. I've modeled with a 25-year amortization, but it works with a 30-year, so whatever you get is great. So cash to bank is 75,000, which is 20%, but there's legal, there's an appraisal, land transfer cost. I have a fee, but Santa is going to be putting in 15K. So if I add all these things up, it basically says the investor is all in for 70,575. And when I calculate that return percentage, the 22.5% annual return, it's on this number. So in terms of the money coming in and money going out each month, rent would be set at 2350. Her option credit is going to be set at 390, so 2740 is coming in. The mortgage payment is going to be 1667. This is actually assuming a 25-year amortization. I've estimated insurance at 250, property tax at 300. Again, these variables could change once we actually find a house and look at the actual numbers. And I always update this spreadsheet with actuals. Once we do a deal and we get all sort of the legal paperwork back, then I kind of finalize this, share it with the investor, but these are pretty healthy estimates. So if I subtract this 2740 and 2217, the money in, money out for expenses, leaves us with 523. So the monthly payout to the investor is 350. I take a property management fee each month of 100, and we just leave 73 in our joint account. Let's fast forward to 3 years from now. So we've already said the sale price is 431. We return the initial 15K in deposit. We return her option credits, the 390 times 36 months. So we give this back to her. We have a mortgage discharge. And then of course we have legal closing costs. There are no realtor commissions though, because we're doing a private transaction to Santa. Now lawyers are involved, so everything is on the up and up, but there's no need for a realtor. She's already living in the house. And of course, we return your initial investment. So this is the proceeds from the deal just at the sale time. Now let's look at overall profit. So we have 56K in appreciation. This is the gap from 375 to 431. Over the course of 3 years, about 20,000 of the mortgage was paid down, and the rental cash flow was 4770. If I add these three numbers up, the subtotal is 81,000. We removed land transfer and the two legals. There was no referral here. So the total profit available on the deal is 72,000. Now the investor was in for 70K. I'm promising 22.5% annual, which is a total of 67. If I just do the math there, that total profit is 47.6. Now some of that came from monthly cash flow, right? 36 months times 350. So the remainder of it comes when we sell the house. I'm just subtracting 47 by this 12 to get you the 35 number. Now, in terms of how I make money, I collected 3,000 up front to kind of get the deal going, find the tenant buyer, and sort of just broker everything. I collected $100 a month for 36 months, so that's 3,600. And then the remainder of my profit comes at the end of the sale as well. So I'm very motivated along with you to make sure this deal succeeds to the end, because that's when we both make our most profit. And again, to see the profit split, 72,000 is the total profit pie available. 47 goes to the investor, 24 goes to me, which is really kind of a 2/3, 1/3 split. And that's what I always target with my deals for rent to own. So if you're interested in passive real estate investment on Ontario, where the tenant is vetted, really strong, great financial profile, driven, hardworking, and you really do not have to lift a finger. Most of my investors do not ever visit Cornwall. If they do, they're welcome to kind of go check it out, but the majority of them have never been to Cornwall in their life. If this sounds like something you might be interested in investing in, certainly drop me a line, just get back to me, and I'll be happy to talk to you. Take care.